Don't be surprised we open a little bit weaker this morning. Maybe see some buying coming in later this afternoon. Ideally, we'll hold support right there at the 100-day moving average, which is about 43.60 on the S&P. Here's what you need to know before the bell this morning. Futures are pointing lower because of the Fed's announcements yesterday. A couple of things here, though. We're probably close to the end of whatever this corrective phase is. And the reason I say that is really twofold. One, we're about to head into our third week of sloppiness. And as we've talked about before, markets can only kind of have these selling stampedes that last for so long, and then we'll get a buying stampede, so back and forth. But as we did talk about yesterday, we said that if the market breaks out of this consolidation range that it's been in, either upside or downside, there was going to be some more downside pressure. So today we're going to be looking at challenging this 100-day moving average. Could go a little bit below that. We have support here at these August lows when we had that 5% correction. So again, support is going to be somewhere right around 4,300 on the S&P. And that's probably about the bottom of where we're going to get to during the sell-off. A couple of reasons for that is, A, market's getting pretty oversold here again. Yes, we did trigger a sell signal, but that sell signal triggered at a pretty low level relative to where we've been historically. So again, we're just kind of flopping around here a bit through the seasonally weak period. So again, we may see a little bit more selling pressure, but there's not a lot of downside risk to the markets here because the markets are already oversold here where we're getting to at this point, and we're going to kind of start wrestling with support here. So again, don't be surprised we open a little bit weaker this morning. Maybe see some buying coming in later this afternoon. Ideally, we'll hold support right there at the 100-day moving average, which is about 43.60 on the S&P. Another reason, though, that we're kind of keeping a watch on this and thinking that we may be getting close to a temporary bottom here in the market. Again, this is kind of that setup now for the markets to get ready to move into a more seasonally strong period. Is if we take a look at volatility, we've been talking about this as of late. We said, hey man, volatility's been really suppressed here. We could see an uptick in volatility, and we did actually see that. We saw volatility pick up over the last couple of days. Again, not surprising because the markets have been have been under pressure. But volatility is getting pretty overbought here on a short term. So again, on a short-term basis, just over the next couple of trading days, we may see a little bit of selling pressure today, maybe see some buying this afternoon, maybe see some buying tomorrow, early next week. But we're probably getting pretty close to the bottom of this particular little sell-off. We may get another rally, some more chopping around, kind of flip-flop back and forth as Gary Shandling used to say. It's, sex is like a fish out of water, a lot of flopping around, heavy gasping for air. That's kind of the market here. But after that, then, kind of once we get through this period, we'll be set up as we start to move into earnings season and getting ready for the end of the year. But again, just kind of keep a watch on the markets itself. And again, volatility has remained suppressed, continues to remain suppressed, but it has upticked over the last few days. And again, that's not surprising with the recent sell-off. But that's what you need to know before the bell this morning.